$44.8 billion for mayonnaise and mustard, Maya. That is a small country's GDP just for condiments.
Oh, come on. You are totally ignoring the scale. McCormick and Unilever Foods combined is a $20 billion revenue behemoth.
The valuation is still cooked, though not as cooked as Allbirds getting scooped up for $39 million.
You can buy that entire company for the price of a Manhattan penthouse.
Brutal. Almost as brutal as being an Apellis short seller waking up to a 136% spike this morning.
Biogen is definitely not messing around, which is exactly where we need to start. The rundown.
136% in pre-market. Short sellers on Apellis are absolutely weeping into their keyboards right now.
I mean, Biogen dropping $5.6 billion in cash is going to do that. But you have to look at the contingent value, right? They tucked in there. It isn't a clean 5.6. They're hedging their bets on clinical milestones.
Spoken like a true footnote reader. But look at the pattern. It's not just Biogen. Eli Lilly is grabbing Centessa for up to $47 a share. Big Pharma is finally opening the checkbook and paying absolute premiums for late-stage assets. They're buying the future.
They're not buying the future, Nate. They're buying a life raft. This is pure, unadulterated panic. The Parton cliffs are looming, their internal pipelines are dry, and they're just throwing billions at rare disease specialists so their revenue doesn't fall off a cliff in 2 years.
Panic creates great premiums. I'm not complaining. Speaking of falling off a cliff, though, did you see the Allbirds number?
39 million, with an M.
I had to read it twice. American Exchange Group scooped them up for $39 million. Remember when every venture capitalist in Silicon Valley was wearing those wool runners and claiming it was a $2 billion brand?
The ultimate zero interest rate casualty. But the tech bros still have to eat, which brings us to Danone. They just bought Huel for $1 billion.
$1 billion for powdered meals. Danone wants that sweet, optimized nutrition multiple. Honestly, pair the Huel acquisition with Mas buying Huaji Group for full-stack AI computing, and you have the complete Silicon Valley starter pack in one news cycle.
Just add MindBody and ClassPass, merging with EGYM for your midday wellness break.
Exactly. It's a busy morning, but all of these deals are basically rounding errors compared to the absolute monster sitting on our desk today.
Right. Unilever and McCormick, a $44.8 billion flavor cartel.
I cannot wait to tear into the structure. Unilever walking away with $15.7 billion in cash and a near 10% stake.
I pulled the deck. The projected $20 billion in revenue is doing a lot of heavy lifting here. The big one. I'm still trying to wrap my head around the timeline on this one. Mid-2027. Nate, that's a 3-year closing window for mayonnaise and garlic powder.
You're laughing, but this is a $65 billion spice rack. McCormick is sitting at $21 billion, and Unilever Foods is being valued at $44.8 billion. You don't just smash those together over a long weekend.
Sure, but 3 years? What antitrust regulator is looking at Hellmann's and Old Bay and thinking, wow, this is a monopoly threat to the American barbecue?
It's the grocery aisle real estate. Think about it like a banker for a second. Put your pitch deck hat on. Together, they're projecting $20 billion in revenue for FY25. If you control that much of the center store, you dictate terms to Walmart. You dictate terms to Kroger. That's the entire play.
I get the scale argument, I really do. But look at the structure in the footnotes. Unilever is walking away with $15.7 billion in cash and exactly a 9.9% equity stake in the new combined entity.
Ah yes, the magic 9.9 classic.
Exactly. They keep it just under 10% to avoid equity method accounting and dodge a ton of regulatory and board-level governance headaches. It's a very elegant structure, but I still think McCormick's severely overpaid. $44.8 billion for Unilever's food brands. Growth in that sector is practically flat.
I completely disagree. You're undervaluing the defensive cash flow. These are legacy brands, Maya. They print money in any economic environment. If we hit a recession, people still buy ketchup and black pepper.
People buy store brand black pepper, Nate. That's my exact point. You're paying a premium tech multiple for mustard. The margins just don't justify a $44 billion price tag.
I'll concede the mustard multiple is a bit spicy. Sorry, I had to. I know, terrible banker humor. But look at the big picture. Unilever gets a massive $15.7 billion cash pile to go hunt for high-margin health and beauty assets, and McCormick becomes the undisputed global flavor behemoth.
A behemoth if it actually closes. Do you know how much the macro environment can change in 36 months? Interest rates, consumer spending, totally different political administrations. The financing costs alone on that cash portion could swing wildly.
True, the breakup fee must be absolutely punitive to lock them in for 3 years. I was digging through the initial filings this morning trying to find the exact penalty.
It's buried. I spent 20 minutes looking for it before we started recording. But while you hunt for that, I want to talk about a sector where deals are moving a lot faster than 3 years and actually have some insane market drama this morning.
You mean the life sciences feeding frenzy? Because I'm looking at a pre-market chart right now that looks like a meme stock, and I know short sellers are absolutely weeping right now.
136% pop. Biogen isn't messing around. Voices?
So every analyst note I read this morning says the exact same thing. Big Pharma is terrified.
Terrified is a strong word for companies sitting on mountains of cash.
They are staring down the barrel of massive patent cliffs. The prevailing quote today is that they are desperately acquiring late-stage assets to replenish pipelines. Desperately.
Well, when Biogen drops $5.6 billion in cash for Apellis Pharmaceuticals, desperation might be the right word. Plus a contingent value, right? You know, I love a good CVR.
You love a CVR because it means the bankers could not agree on the valuation.
It means Biogen wants to hedge its bets on rare diseases while keeping the upside open. But look at the market reaction. Apellis shares spiked 136% pre-market.
The short sellers are absolutely weeping today. I can smell the margin calls from here.
Total massacre. And Eli Lilly is right behind them, scooping up Centessa for $47 a share.
But I actually think the tech infrastructure race is the bigger narrative. Industry watchers are calling it a race for strategic stack ownership. Musk buying Huaji Group to get their high-performance computing is exactly that.
See, I disagree. The AI deals are mostly defensive posturing right now. The pharma deals are purely existential. If Biogen loses exclusivity, their revenue vanishes. If Marseille misses out on one computing target, they just buy another one next quarter.
That is fair. Speaking of vanishing revenue, did you catch the Allbirds number?
Oh my God, $39 million.
American Exchange Group is buying the former king of Silicon Valley footwear for $39 million.
That is barely a rounding error. It is just grim.
From tech bro darling to the bargain bin. Speaking of testing the market's appetite, I am very curious to see how retail investors react to this new convenience store IPO tomorrow.
Right, yes way. 449 locations and they want to list on the NASDAQ.
We will see if they can price it. But honestly, they might get totally overshadowed by the absolute monster of a food deal that just dropped. Spill the tea? I'm currently looking down at my feet and realizing my shoes are practically worth more than the company that made them.
Wait, you still wear Allbirds?
They're comfortable, Maya, don't judge. But seriously, $39 million. That's all American Exchange Group just paid for the entire company?
Remember when they went public at a $2.1 billion valuation? I pulled their last few quarters of cash burn before we started recording. The value destruction is staggering. Honestly, $39 million feels generous for what's actually left on the balance sheet.
Harsh, but true. If we're talking about real financial pain, though, we have to talk about the short sellers who bet against Apellis Pharmaceuticals yesterday.
An absolute bloodbath. Biogen swooped in for $5.6 billion in cash, plus a contingent value right.
The stock shot up 136% in pre-market. 136. Some hedge fund manager definitely threw a keyboard across the room this morning.
They should have seen it coming. The life sciences sector is in a massive M&A frenzy. Big Pharma is staring down the barrel of looming patent cliffs. It's textbook panic buying.
I wouldn't call it panic buying. It's strategic pipeline replenishment. Biogen needs rare disease assets, Apellis has them. It's a clean fit.
Oh, come on. When you're paying that kind of premium, plus a CVR to sweeten the pot, you're desperate. You are literally paying a premium for the fact that your internal R&D failed to deliver on time.
You're so cynical. I think it's a smart grab. They get the late-stage therapeutics they need right now.
We'll see if the CVR actually pays out. That's where the real story always hides.
Fair point. Speaking of testing the market's appetite, are you watching the IPO window tomorrow?
I am. Yesway just filed to list on the NASDAQ. 449 convenience store locations.
I need to know if retail debuts actually have a pulse right now, or if we're just going to see more SPAC mergers like that billion-dollar Crown Reserve and Carvix deal. Tomorrow's radar. I'm actually keeping my eye on Yesway tomorrow. They just filed to list on the NASDAQ.
449 convenience stores testing the IPO waters right now. That is certainly a choice.
People need gas and beef jerky. Retail debuts are tricky, but this is a brilliant bellwether for consumer appetite.
I completely disagree. A regional convenience chain going public tells us nothing about the broader IPO window. It just tells us private equity is desperate to exit.
Spoken like someone who doesn't appreciate a good roller grill hot dog.
I appreciate a clean balance sheet, Nate. What I'm actually watching tomorrow is the Crown Reserve SPAC.
The $1 billion Carvix merger?
Exactly. We should get early regulatory feedback. If the SEC asks hard questions about those forward projections, that deal could fall apart by Friday.
A SPAC falling apart. Now there is a shock. We'll be right here to pick up the pieces tomorrow.